Hey everyone, it's Alex Kahaya from the Index Podcast. I want to tell you about Mantis, a groundbreaking platform that's simplifying the way we interact across blockchains. If you're a developer or just into DeFi, you'll want to pay attention. Mantis enables trust-minimized transactions across different chains, letting you trade or execute actions seamlessly while getting the best possible outcome, all without the usual complexities. Imagine being able to move assets and settle transactions across blockchains easily with maximum value extraction, all while staying secure and decentralized. That is what Mantis is bringing to the table. Mantis is an official sponsor of the Index Podcast, and their founder Omar and I regularly host a new live stream series on X called Everything SVM. We have these live streams weekly, and if you want to keep up with what's happening in the Solana ecosystem, especially as it relates to the new innovative deployments of the Solana virtual machine, you should tune into this live stream. Check them out at mantis.app and follow them on X at Mantis, MANTIS. At the Index, we believe that people are worth knowing, and we thank Mantis for enabling us to tell the stories of the people who are building the future of the internet. We'll see you on the other side. Hey everyone, welcome to the Index. I'm your host, Alex Kahaya, and today I'm excited to have on the show Eli Cohen. He's the general counsel of Centrifuge, a blockchain-based platform that allows users to tokenize and manage real-world assets on-chain. Eli, thanks so much for being here today.
Yeah, thanks, Alex. It's great. I'm really looking forward to it.
So I was taking a look at Centrifuge. I find the RWA space to be fascinating. I've invested in a couple companies that are doing RWAs, most notably this company called Baxis that tokenizes whiskey. I don't know if you know them. Well, they started with whiskey. I mainly did that because I love whiskey.
Yeah.
But I also just I want to be kind of along for the ride to see how the technology develops and the different components. But one of the things you and I were talking about before the show is just I also love talking to GCs. I don't get as much time to talk to GCs. I'm typically talking to other founders, different roles, like investors and things like that. And, recently, and I would love to talk to you some about this on the show a little bit later. We've just seen so much movement in the crypto space from a regulatory standpoint. And I feel like it's a different operating environment for general counsels than it was, the past 10 years. So yeah, I would love to hear from you on that. But before we get into it, can you just tell me a little bit of your story, how you got involved with Centrifuge and kind of why you're even working in this industry? What gets you out of bed in the morning to do this?
Yes. I would love to, Alex. Yeah. So, I've been in finance for a very long time, 20 plus years in traditional finance, mostly different financial market infrastructures across Asia Pacific and in Europe. So Singapore Exchange, I worked for Euroclear Bank in Brussels. So a number of different really financial market infrastructure where I was in-house counsel. But I got into the space when I was at CME. So I was at CME Group in 2017, 2018. I was their lawyer for Asia Pacific, and they launched the Bitcoin futures. And so somewhat against my will, I became involved in the space. I wasn't really planning to do that, but in 2017, 2018, I started following a lot of the rules regarding Bitcoin particularly, but the whole regulatory space. And it was pretty early days, especially in APAC. So I spent a lot of time talking to the regulators in Tokyo and in Beijing and Singapore and Hong Kong, across the region. And there was a large discrepancy in terms of how people were viewing crypto at that time. To a certain extent, there's still quite a large discrepancy among the different regulatory authorities about how they view crypto. But it was just really interesting space to be in because there was so much evolving thinking among the regulators in the industry, among the industry itself, and how people viewed the regulatory structures of the products we were working on and dealing with. So it was just fascinating. And I eventually left CME 2019 and joined Block One in Hong Kong and worked there for a few years, and then was thinking sort of what would my next move was going to be. And I looked around, it was DeFi summer, and I'm like, wow, all of these DeFi projects are really cool. What would be the most fun and challenging to work on? And I thought real world assets was it. because, it's really the bridge between traditional finance and DeFi. And it seemed to fit, my personality seemed to fit, my skill set. And it's been great. Centrifuge is just, I love the team, and we know what we're building, and the RWA space generally. Tokenization is just, it's just at the beginning of taking off, in a really big way. So it's been, a huge ride so far, and it's we've got a few more years, I think, to ride it.
Can you talk a little bit about why bringing real world assets on chain even matters? Like, what's the benefit for investors, for issuers? Like, can you just sort of explain, I guess, the different moving parts and why it's better than the current way of doing things?
Yeah, I mean, that's obviously what we do. So we believe in it, and I believe in it. And, I think, you sort of think a little bit back on I like to look at history. I'm kind of a bit of a history nerd. And if you think back to sort of financial services generally and what they looked like, 20 years ago, everything was paper-based, right? Everything was based on paper. You had to do this share certificates, you had to move things around mostly by moving paper around. And, in sort of the mid 90s, that began to change, and things became more, electronic form and Web 2 electronic portals and access that people could do directly to their brokerage accounts online. And so that began to change, and it changed the way people viewed their investments. It changed the way people thought about investments. And tokenization is going to be the same. It's going to be even bigger, I think, because, it allows for a level of efficiency and transparency that we don't have today in the financial markets. And it allows for a level of democratization that we don't have today in the financial market. So everybody works through intermediaries today, brokers, asset managers. Asset managers develop products and they sell them to brokers, and the brokers sell them to clients, and they don't have a direct access to the retail. And I think, we talk to a lot of big asset manager companies. We're working, with Janus Henderson now, and they really believe that, a direct access to the retail market will change the way they can develop products, because they can develop niche products for specific segments of the retail public that they cannot do today without the blockchain. So, tokenization is going to change everything.
Yeah, I mean, it's all about it's velocity of money and easier way to custody assets. Even, and I think like people don't realize that so much of it still is paper. Like mortgages are all paper, right? That are custodied somewhere, the physical paper of every mortgage, which I didn't realize. It's funny actually around. So you said, was it 2020? Was when you kind of made the switch? I missed the date.
2019.
2019, right? Yeah. That's pretty early for like thinking about RWAs, right? Like it wasn't really a trendy thing. And I think, but it was 2020, like late 2020. I actually wrote like a couple page research. It was more than notes. I would not say it's like a paper, but I did a lot of research into mortgages, and I'd gotten a couple at the time, and I was like, man, I wish there was a better way to do this. Seems like an obvious use for blockchain technology. And that was the first time that I actually realized that it was paper based. And I learned a lot about how the secondary market works, right? Like literally you get issued you get your mortgage, it gets underwritten and given to you. And then like 2 seconds later, there's some dude on the phone selling that thing into some kind of mortgage-backed security or whatever. And it's spreadsheets, between like two entities. We work with another company that's doing an RWA that's around municipal bonds. Mm-hmm. That's even worse, right? Like it takes literally 10 days to trade a municipal bond.
Yeah. It's crazy. Yeah. Yeah. Phone calls back and forth to the brokers. Yeah.
Between two different brokers and stuff like that. And there's probably dozens of people involved in that transaction, which is totally unnecessary. Same thing with foreign exchange swaps. It can take like 4 or 5 days to settle that with a lot of currency risk in between, because they got to like collateralize, one currency for another to make it like appear instant. And it's just all the stuff that people are just not aware of that are massive, like multi-billion-dollar a year, even trillion-dollar a year, right?
Yeah.
Industries that are so inefficient. So, all right. So walk me through, like, how did you even first hear about Centrifuge and like get involved, and like where did it start, versus like where it is today?
Yeah, it's evolved quite a bit. So the team that started Centrifuge, I didn't join at the beginning of the process. I joined a bit later, but the team really came from sort of a fintech startup background. They had launched a Web 2 based invoicing finance system, which they later sold to SAP for about $1 billion, which was a company called Talia, based mostly in Germany. But the team is across different jurisdictions, in the U.S. and Germany and in Switzerland. So they have the founding team has a really good history in terms of how to manage startups and how to launch startups. So that was where they came from, and sort of in their looking into the invoice financing space, they looked in, they found an obvious use case for the blockchain technology. So a lot of the first pools that Centrifuge launched back in 2019, 2020 were trade financing, trade receivable pools. They were fairly small pools, fintech companies that had a series of trade receivables that they put into an asset-backed security, and they sold, to retail markets outside the United States and to accredited investors in the U.S. So that was they did a series of pools in that era. Small pools, companies that couldn't really raise money in the traditional financial markets. They would have had to go to a bank, and here they could get a much better rate. But that was we were still in sort of the low interest environment at that stage. So to make things attractive for the DeFi investors, you had to have a fairly high, fairly high interest rates, fairly high yields, compared to what we see today, where already now you've got the U.S. Treasuries yielding at 5%. So we're in a very different market today, and then that Centrifuge had to kind of evolve along with that. When the interest rates changed and the treasury rates started going up, the big demand in the space among the DeFi protocols, the big DeFi protocols, was for treasuries, and tokenized treasuries eventually. So we started building out a number of different protocol features to help fund management companies, asset management companies, launched fund products which could be backed by U.S. Treasuries. And so we launched our first U.S. Treasury pool in September 2023. Now that's around $40 billion in AUM and TPL. So that's kind of it's been a good success for us.
And those that have been good businesses. Like I had no idea how those funds work. And so I met, there's these guys from Etherfuse that I think launched, they're called Etherfuse, but they're actually on Solana. And I think they did I'm not sure if it was bonds or what it was. But it was one of these ones that like was easier for, like, you didn't need a ton of licensing or anything like that to get out the door. And I can't remember exactly what the fee structure was, but at scale at 40 billion, it's good, right? It's a good business.
Yeah.
And again, I think that's like where people who are not in that game, in the finance game, like don't really understand the mechanics of that. It's something I'm still just learning about. I do like regulation is an interesting topic, especially for you because you're a GC. I'm sure this is like what you deal with every day. I have been talking to actually a number of teams through my company, ABK Labs, about permissioned environments, and versus like operating on a permissionless network, like Ethereum or like Solana mainnet. And I'm curious what your take is on that. Like, are there some of these RWA assets that need to operate in a permissioned chain where like you got to control who the validator set is? And if so, like, can you just explain to me why that is the case? Or is there a gray area and people are just sort of hedging against gray area and that's why they want permission chains? Like,
I don't think the chain needs to be permissioned. I haven't seen any push yet from any of the regulatory authorities to require the validators on the chain to be permissioned. I mean, there are some concerns. A lot of the big traditional financial players are using private chains for that reason. So they don't want to be subject to a risk of sort of a public validation system. But, for our purposes, the important permissioning is really at the level of the investor, right? So as long as you can follow the proper KYC processes that are required under the issuance, legal structure, then you don't need the validators on the chain itself to be permissioned, as long as the investors go through a proper KYC. So that's the way Centrifuge works, is we have a sort of an automated KYC built into the system that issuers can use if they want to. Some issuers have more stringent requirements and have to do it separately outside of the Centrifuge platform itself. But all of the products are KYC products.
It's interesting because to hear you say that about the regulations and what needs to be permission versus not, it sounds like what you're saying is like really big institutions like banks might have like zero risk appetite for uncertainty around the regulations. It's not even that they necessarily even believe they have to be in a permission environment. It's just that they don't know what the regulation is. And so therefore their only way to participate is to issue on a private chain. And now we're seeing, Trump got elected. These regulations are changing very quickly. And you're seeing like the CEO of Bank of America being like, yeah, we'll custody Bitcoin. I mean, if you're custodying Bitcoin, you accepted it and you're sending it on a public permissionless network where you don't control who's doing what. And yeah, maybe we're like a lot closer now to having these like banks actually just like operate on chain.
We are. I mean, the big game changer for us in real world assets was BlackRock launching their Tokenized Treasuries fund last March, and that was having BlackRock in the space is they're competing against us in a way, so that's makes things difficult, but overall it's been fantastic. I mean, it's just the amount of interest in it's generated, the amount of the number of other asset managers that want to come talk to us, that want to be in the space because of BlackRock launching it and using a public chain has just been a big game changer for real world assets in my view.
Did that actually hit your business, or did you see a bump in interest because of that, or was it net positive? Yeah, so you have
absolutely
coming in.
Yes, cool. Absolutely.
Yeah, I'm just poking around on the site here. You've got lending too and borrowing. But it's for real world assets. So I can, so this is one of the things that was super cool with Bex, is to give like a really concrete example. And maybe you could do the same with some of the assets you guys carry. They deal with distilleries, right? And it's typically a really illiquid market for collectibles, right? Is one thing. But also the casks and getting financing for your cask. Like if they're going to age for 10 years, you got these barrels just sitting there that you can't sell. And the only way these people finance operations is through borrowing money and collateralizing the assets that they have sitting in those casks. And before blockchain technology, like really only private equity firms would lend to these people and these companies, these small distilleries, and it would be like huge interest rates, really bad. But then if you tokenize the casks and use decentralized finance to offer up you give them access to capital at a much cheaper rate, because individuals are not private equity firms. They're not motivated the same way. And so I'm wondering if you guys are, like, it sounds like you guys have started more with like Bax is a really niche product, very big market, but like not comparatively to like treasuries, right? Sure. Right. So like, what's your perspective on that? What kind of other assets do you guys have or plan to have that where we might see a similar dynamic where it like unlocks this capital, access to capital that it wasn't already there?
Yeah, I mean, I guess that's not really what that was kind of our focus initially. Was we had a number of different, issuers that were doing things that they couldn't do in traditional finance, could only do it with a blockchain. But we've kind of moved on a little bit from that and really are trying to develop tokenized features, tokenized products that traditional asset managers can use to take what you see in the public markets outside of DeFi and move it into DeFi. So it's to take things like treasuries, it's to take things like collateralized, loan obligations, to take all kinds of different public securities that you would see there are huge markets for and put them into the DeFi world, where there's just a whole new set of investor base for them and a whole new way of working for them, which eventually will become more efficient and will improve their operational efficiency and improve the way that they can, relate directly to their customers. So yeah, I mean, I love those business cases. We talk to a lot of people in the RWA space. We run a series of events every year called the RWA Summits, where we have a lot of people in the space that are doing things like, casks, whiskey casks, or diamonds or art, that are taking things that there's just no market for in the public markets, and creating markets for them where they never existed. That's a great use case, but it's a little bit different than the use case that we're trying to develop.
Well, I think it's the right call though, right? In hindsight, it probably seems more obvious now, but like, this is where the money is today,
This is where the money is.
right? And there's an existing business model and you don't have to reinvent it, all of it, right? You're
Right.
10xing the speed at which the money can move with technology. But you're not really changing fundamentally the business, right? It's just something like out of the box that these fund managers and asset managers are just used to.
Yeah.
And they are getting access to new customers.
Yeah.
And probably the customers they were going to acquire if they stayed on the old technology that they would want to get after, right? Like millennials and stuff like that, who are increasing, like younger people are increasingly using crypto, right? They're getting onboarded through like things like meme coins and stuff like that. They start having families, they start really managing their assets. And I mean, I think pretty soon you're going to see even like my financial advisor, like using these kinds of products, right? To get me access to other kinds of investment opportunities. Another one that I'm really interested in, this one kind of, I think, might end up overlapping with the segment that you guys go after. It's probably like more on the long tail, but what is the name of the company? I can't remember. They're tokenizing oil wells.
Oh yeah.
And that one is again an area where private equity firms are typically, that's a really big market. And they're I don't know if they're securities or not, but it's like a bundle of wells kind of thing, I think. And that's a market where there's a lot of activity from professional investors, but not any access for people like me, like accredited investors who could get access to that. It generates pretty stable yield. And it's a pretty safe, like low to medium risk asset to buy. And I just find that super interesting. I think there's going to be this like you're going to be able to go to several different platforms now and just really easily like add these things into your portfolio, at the speed of light, right? Like
Exactly.
book prices.
Yeah, no, exactly. It's a whole new. I mean, for investors that like to think about diversification, it gives you an incredibly new, huge range of things that you can look into, which nobody would be able to have done before. So, yeah, and I think people will look into it. I mean, I think obviously there's always going to be a group of investors that who prefer to deal with things through their financial planners and don't want to do it themselves, don't want to do their own research, but there's going to be bigger and bigger numbers of people that want to do their own research and like to do their own research to find sort of niche products like oil wells.
Let's change gears a little bit and talk about Trump and this crazy world that we're living in now, post-election. Explain to people who might be just tuning in for the first time, like what was the state of the world from your perspective as a general counsel at a crypto company before Trump got elected? And then now what is the state of the world?
Right. Well, I mean, most of the world hasn't changed. So, we were, that's a global company. We've been dealing with regulators across the world, and most of them haven't changed. But the U.S. is by far the biggest market. I mean, let's not, we don't have to mince words about it. U.S. is the biggest market, especially for financial services. The U.S. has been the leader in the securities space for a long time, for financial regulators for a long time, and the last administration, Gensler SEC, was about as bad as you can imagine. I mean, their hostility towards the crypto markets was really off the charts. Something that I don't think anybody expected and anybody was really prepared for among the sort of the legal bar, the crypto bar. We've always, the lawyers always know that there's regulatory constraints on what we do, and we like to work with the regulators to find the right approaches. We like to work with the regulators to for sensible and reasonable regulation. But that wasn't the Gensler approach at all. They didn't have any interpretive guidance. They didn't do any rulemaking. All the things you would normally see from a standard SEC. In the crypto space, they just tried to shut everybody down. And, huge projects that were doing the right thing, like Coinbase. I mean, really, really an approach that I don't think anybody could have foreseen or predicted, and an approach that obviously completely backfired on them and backfired on the administration, I would say, in a big way, things that did not help them when they came to the election. And, I think the Trump administration everybody has very high hopes that, we're going to see some kind of real sensible, understanding. I think that, the things that they're doing so far, the executive order has been very helpful. And they've done other things like the meme coins, which maybe not so very helpful, but, let's hope that, when the right people are in place in the right agencies, they've got the right people in Congress. I mean, Senator Loomis is fantastic. And we're all hopeful that they're going to put the people in place to develop the right regulations that are then going to become a model that other countries can use. I mean, because in the end of the day, everybody in the crypto bar would like to see the most uniform regulations across the major jurisdictions as we can have, because that would be the most beneficial for all of us, in working in the markets.
Did you guys, have you any personal war stories you can talk about from like the Gensler days where you guys had to deal with like, really, how did it impact your business?
RWA space has been pretty lucky in a lot of ways because we weren't so touched by the SEC. The big debates among how we test rules never really apply to us because the tokens on the platform are securities tokens. These are issued as asset-backed securities or fund shares, all securities tokens. So we never had to get into the big debate about, is this a security? Is this not a security? But what did impact us, I think, much more substantially was the choke point 2.0 was, RWA really depends on rails, TradFi rails. We depend on being able to have a brokerage account and a bank account. And, the projects that work with our platform are, they can't run their business without it. So, when we were starting to see a lot of hostility among the federal regulators in the banking space, particularly, that made things very difficult for us. I don't know if I have any specific war stories I can share because
it's interesting to hear just a high level proof point that it did happen. I was talking to somebody the other day and I was trying to explain this to them and they were like, oh, I don't believe that's actually happened. I was like, it was widespread. I'm really talking like almost everyone I know has had some debanking experience or denial of a loan or something just because I work at a crypto company on their resume.
Yeah.
And it has a massive impact on business. And I think what's interesting now is we have companies that are out there that are building technologies that I think can circumvent that in the future if it ever happens again. Like a company like Squad's protocol on Solana, right? They're a multi-sig, but and they have another product called Fuse Wallet that's like a self-custody bank, like
right.
just for individuals. So like Squad's is like the B2B version. It's kind of like, I don't know if you know Mercury Bank, but
yeah,
like that.
Yeah.
Where eventually I think you'll be able to issue multiple cards to people and they have a debit card, that debits straight from your self-custody wallet. And you can take ACHs in USD and it auto converts to USDC, right? Like
wow.
That's amazing. Like every time I talk about it, the hair stands up on my arms. And I think like people might not know why, like really like Grok, why that matters so much to you, but I've been in this space since 2016 and just like dreaming of something like this where you can't get choke pointed if you have something that is self-custody. The only thing they can block is the on and off ramps, which is, that's still, that's, I think now because of the regulations though, like, and with what's happening, that might not be a problem anymore.
It should,
deny.
Yeah. I obviously, I think that the Trump authorities and the Trump administration are not going to be continuing to pursue that. The executive order seems quite clear that that's not going to be something they're going to pursue. But, I think, and there's a number of great retail products like that. But, when you're trying to push a $10 million order for U.S. Treasuries through your broker and then convert it into dollars and then convert the dollars into USDC, big orders like that still require really traditional financial rails. And
I think, I think I should introduce you to the Squads guys because they've got like APIs and stuff that they're built on where like this stuff happens for fractions of a pennies and at the speed of light now. Like and for so like the fees are super low too, right?
That's good. Yeah.
And I think they use a combination of their APIs and Bridge, which was just bought by Stripe.
Right.
But these tools did not exist like a year ago, right? Like I don't know when Bridge started, but like in this combination where you can stitch things together to feasibly, maybe it needs another year or 2 years or something to mature. But I do think that eventually we could see products where like the cool thing about this is with their APIs, y'all could just build that stuff into your product and offer it as a service to your clients. So they don't have to, necessarily use a
I just think it will become the TradFi. It's like they're going to meet in the middle, and it's kind of like everything's going to get. It's like, what was that thing Andreessen said about SaaS, software as a service? Like software's eating the world. It's going to eventually self custody and blockchain will just eat everything. Especially finance related.
Yeah, no, I agree. I mean, that's what we're talking about in terms of the convergence that you see. You see this whole convergence of all these different projects working together. And, for real world assets, you really need a whole sort of ecosystem behind it. It's not a single project that can bring the whole market forward. You need a series of different projects, and everybody's working on different things, zero knowledge KYCs and, direct API conversions for fiat rails. It's, all of that stuff needs to get put in place. And when it does, then you're going to see a completely different way of operating.
Yeah, I totally agree. It's an exciting time. I feel like you look again, your product with 40 billion in just that one what was it, Treasury bonds or something?
Yeah, Treasury bills. Yeah, 40 million. Yeah.
Treasury bills, right? That's just one of your products. You've got other ones that you guys offer. That's a serious amount of traction.
Yeah. They're. I mean, 40 million, not 40 billion.
Oh, million. You said billion. Yeah. Still, it's okay. It's a lot. It's a lot.
Yeah.
And I think it's growing. We're seeing this kind of thing grow and expand. It does bring me to a question though. You guys are on Ethereum right now, right? When Solana?
Soon, I hope. Soon. We're talking about it. I think we're talking to Solana. One of our business development people are talking to them tomorrow, maybe. But we would love to be on Solana. Of course, we want to be on a number of different chains. We're actually built on Polkadot now, so that was
cool.
Yeah.
Are you a Polkadot chain?
We're a Polkadot parachain. Yes.
Wow.
Yes.
That's so interesting. So I talk about that a lot because it was like when I was choosing on where to go, it was Polkadot or Solana back in 2021.
Yeah. Right.
Where I was going to go build things. And I chose Solana because the parachain auction thing was just so expensive. I know. It's just so hard. The big barrier to entry, whereas like Solana, you can just build.
Yeah.
And so you guys kind of have an app chain that connects to other networks.
So EVM compatible, right? Yeah. Of course, everybody's going to have to be cross-chain compatible, and they're building on, certainly EVM compatible. Everyone's going to have to do that. That's where the TradFi players are for us. So, Ethereum still makes a lot of sense, but we would love to be in Solana, of course.
Yeah, I just asked stuff because there's so much liquidity there. It moves really fast. I think one thing I do want that you just remind me of too is the users, right? Like, you brought the meme coin thing, the Trump meme coin, Melania, and I've always kind of like turned my nose up at meme coins. I just never really understood them, even being in this space as long as I have. And I know people have made so much money on them. Right? I get what they are, right? Speculation is entertainment. It's attention. That creates some kind of value. I will say that for better or for worse, like Trump and Melania's launches attracted millions of people to downloading Phantom into their browser and trying to do something on chain. And some people made money, some people lost money. That's how markets work. Right. That's how speculation works. Some people probably learned the hard way, which sucks. I don't like that part of it, but I do think it's a net positive for two reasons. One is just a straight up onboarding event, but then two, and this is where I kind of have a question for you, like what your perspective is on this. What does that say about meme coins for everybody else now that the president of the United States launched one? From a regulatory perspective,
right?
I mean, that's not a security. I think we're very clear. Meme coins are not securities. I don't know. What is your perspective on that? Like, what's the impact there? Like when you have the president of the United States launching freaking meme coins.
Yeah, no, I have nothing against meme coins, and I completely agree that the onboarding part of it is actually great for the market, and the hype is in a way good for the market. I think in sort of among the lawyers, the Trump meme coin, I think it concerns us a little bit differently for different reasons. It's more just a question of whether that is going to create an appearance of a conflict of interest for future regulations that might come, and whether other regulators around the world will, feel that detracts from the position of the U.S. regulatory authorities because that's out there. I have my own legal reason.
Has ever prevented him from doing things or his family from doing things that might be perceived as having a conflict of interest. So I don't know what else to say there, but that just is what it is. And then, all the litigation from the last 4 years
has
basically said he can do whatever he wants. So
right. And he does. Yeah.
This is it.
No.
This is the system we're in. Congress needs to pass some laws to check that and balance that, or whatever that we're supposed to do, checks and balances for bad, I guess, if it becomes a problem. But I hear you on that. And then I was reading an interesting thread about this along the same lines of what you were saying, of like, it was basically just asking the question, like, can you essentially bribe a politician by just like holding a ton of the token?
Yeah.
Right? Like, like, is that an indirect, I don't know, because you're like increasing you increase the market. If you move the market and you increase the market cap, you've increased their net worth, right?
Yeah.
But I guess same thing you go for like a publicly traded company. And this is why you're supposed to recruit yourself from operations of your businesses, which, he is.
I mean, he had his hotel. I mean, in the last administration, he had his hotel, a few blocks from the White House, and everybody could just stay at the hotel. So, I mean, I don't think it's really, how different is it really that?
Yeah. So, but also knowing Trump, like, he probably does take favors, but also I think that probably some of this stuff does play into his ego and like influence some things for like the way he thinks and decides to do things. But also like, he does not give a shit about like anything, right? Like, he's just going to do what he's going to do. So there's an argument to be made. It kind of, the door swings both ways for like, does it really matter? I'm not sure. Someone could send him $1 million and he's still going to be like, further later. Right. So
I don't know.
We're getting towards the top of the show. And I always ask this question, what have I not asked you that I should have asked?
Yeah. I mean, I think a couple of things to think about, from a legal standpoint, not to put my lawyer hat back on. Hopefully this doesn't bore everybody, but obviously the Trump administration has changed a lot from the regulatory standpoint, but there's a number of things that probably are still going to be key focuses from the legal side for projects going forward. I mean, I think the two things that probably aren't going to change, or in fact, maybe going to become more important, are sanctions. The sanctions checking and the sanctions enforcement in the administration, I don't think is going to go away, even the Trump administration. And the more they start getting into tussles with different countries, the more those sanctions enforcements will become difficult to manage. So that's something I think that a lot of projects need to think about. And the other part of it is liability, the civil liability that people face in the industry as the numbers start to go up and the projects start to become more important and the regulatory focus disappears. People are going to start taking the law into their own hands and start suing people. So I think people need to be prepared for protecting themselves from liability, especially in the DeFi space. And I think that people need still to be prepared to deal with the sanctions, because those two things haven't disappeared and aren't going to disappear and may actually become more important.
Yeah, I mean, that's a really good point. I think on both fronts, the liability and the sanctions, the liability one, definitely, you've seen some of that play out already, but that's going to become the only option, and it's going to become one that people are more focused on, especially in a bull that then crashes into a bear market at some point. The sanction thing is pretty interesting. Like, we just watched yesterday, I think it was it yesterday? This is the other thing about Trump. It's like 24/7, $1 million a minute, right? Like yesterday he threw these tariffs at Colombia.
Yeah.
Right. And then Colombia came back with tariffs. I mean, they had it resolved by the end of the day. They were like, shake your hands, It's just nuts at the speed at which that happened. But if your project, right, and like, what do these tariffs mean for you and you're transacting digitally at the speed of light on the internet, right? Like, and that's kind of what you're talking about with sanctions. Like, there's just they're going to slam sanctions on countries that don't do what we want them to do, and then you're going to have to then somehow figure out how to deal with that. And it may not be possible in a permission.
It may not be possible,
right? Like,
it's very hard. Yeah, very hard in a permissionless environment. Yeah, and you saw today
comes like easily.
Right. But the VPNs don't protect you from everything. So, yeah, I mean, the geo-blocking is one step, but it's not, not really a full KYC step. Yeah. So, and I think the more the traditional financial market players get into the market, like the BlackRocks and the Janus Henderson, who we work with, the more they get into the market, I think their focus is really going to be on making sure that they don't breach those sanctions rules, because that for them is a big reputation risk, not just a regulatory enforcement risk, but a reputation risk. So they don't want to, no, BlackRock doesn't want their tokenized treasuries to be going to North Korea. That's just not, that comes out in the press. Even if they don't get a sanctions enforcement against them, it's just going to be, just going to be a disaster. So
yeah, reputation
damage. Reputation damage will be more and more important the more TradFi players are in this market.
Well, look, thank you so much, Eli, for coming on. This has been a fascinating conversation. Really excited to learn more about Centrifuge today. And yeah, just really appreciate your time.
Thanks, Alex. It's been great. Been good fun. I hope I can do it again sometime.
Yeah, 100%.
All right. I'll get the lights to work better than next.
Yeah. No worries.
All right. Thank you.
Thank you.